Hey everyone, so in this video I wanted to get into some comments that Mohnish Pabrai recently made about Meta platform stock. Meta, that is the company previously known as Facebook, is a stock that Mohnish made some pretty bullish comments on recently. And in this video I just want to explore what Mohnish said and my own personal thoughts on Meta platform stock. Full disclosure, I personally hold Meta platform stock. I actually bought it before the big crash, so I'm down on the position a little, but I've averaged down since then and I'm up on my more recent purchases. And it seems like Mohnish Pabrai is also bullish on Meta platforms. In a recent interview with SumZero, an individual who's actually been involved with Facebook since the early days and was in fact depicted in the social network, Mohnish called the stock an easy double. And this was in late February, where I think it was at the lows of around mid 180s. Since then, it's gone up a little bit. I'm not sure if he still thinks it's an easy double now. However, the stock is quite beaten down. It's down substantially from its all-time highs, and it trades at pretty low multiples by the standards of big US technology stocks these days. So we can start there. Today, Meta platform stock trades at about 15.5 times earnings, 5 times sales, 4.8 times book value, and 10 times operating cash flow. Now, for big tech stocks these days, these are super low multiples. There are other stocks out there that just a little while ago were being called cheap for trading at 25 to 30 times earnings, and now we've got Meta platforms trading at multiples that are honestly not that much higher than what your typical bank stock trades at. Now, I mean, the sales multiple is a little higher than that, but because Meta platforms enjoys such high profit margins, it trades at a very low multiple to earnings, even while its price to sales ratio is a little high. It's also extremely cheap compared to operating cash flow. So it certainly looks like a cheap stock. But as we all know, stocks don't get cheap for no reason. Usually investors who are selling a stock en masse in response to some sort of event have some kind of logic to what they're thinking. It doesn't mean they're right. They might be a little short-term biased, and I think that's what's going on with Meta. However, there is a reason why Meta platform stock got beaten down so badly. That is its fourth quarter earnings release. In the quarter, it beat on revenue, but it missed on earnings. What happened was revenue, it came in at $33.6 billion, which was up 20%. That was a beat. However, earnings per share were only $3.67, and that was actually down 5% and 4% off from analyst estimates. And of course, when earnings miss like that, you typically see a stock go down. However, Meta platform stock went down way more than just the earnings on their own would have predicted. It went down 26% in a single day, and it continued selling off after that. Now, why did that happen? It partially was the earnings themselves, but I think what really spooked investors was the guidance. In the guidance, the CEO, David Wenner, said that Apple's app tracking transparency changes would cost the company $10 billion in 2022, and he also said that he only expected 3 to 11% revenue growth in the first quarter. So these are not the kind of growth rates that people typically expect from tech stocks that trade at high multiples, and investors thinking that the stock seemed overvalued compared to Wenner's new muted expectations sold off the stock in pretty big numbers. Now, why did Meta's earnings go down in the fourth quarter? Something that might surprise you a little is that they actually could have easily gone up. Meta could have easily beaten analyst expectations in that quarter had they not been investing so heavily in the metaverse. Because you see, Meta is spending about $10 billion a year on the metaverse. They're obviously betting very heavily on this, given the fact that they changed their name to reflect these new priorities. And the spending on the metaverse, which was somewhere in the neighborhood of $4 billion in Q4, was a big part of why earnings went down so much. Now, in the fourth quarter, that specific segment, Reality Labs, which is the segment responsible for all the metaverse-related projects, it lost $3.3 billion on $877 million in revenue. so a pretty significant loss. However, all that being said, we can actually look at how Meta would have done had that Reality Labs not been in the picture. And what we have to do is take out the 877 million in revenue and also the 3.3 billion in losses, which gets us to 2.42 billion higher that EBIT or operating income would have been without Reality Labs. Now, operating income for the quarter was actually 12.585 billion. If you add the 2.423 billion back into that, you get to around 15 billion. That would have been 17% growth over the prior year's quarter, which did 12.775 billion. So what this means is that even with the big hit that Meta is taking from Apple's app tracking transparency changes, its core business is still doing well and is still growing not only on the top line, but also on the bottom line. It's primarily the investments in the metaverse that are holding the results back. Had Reality Labs not been in the picture, the company's earnings would have grown in line with revenue and would have beaten analyst expectations. And just one final note on all of this, we are actually starting to see advertisers' results on Meta on Meta's platforms starting to improve, What we're seeing actually was a story just a couple days ago that broke that showed that advertisers are beginning to report improved results. As we know, Meta has been working on a variety of different methods to improve targeting in light of all the data that they've lost to Apple's app tracking transparency changes. And for example, they're now working on an approach where they target based on groups instead of based on individuals, and hopefully there's enough of a correlation between individuals with other individuals that their interests are similar to that they can be targeted based on that. And it was just yesterday, in fact, that a story broke and started making around in the news that advertisers were indeed beginning to see their advertising results improve. So Meta's revenue for the first quarter might be a little higher than expected. It might exceed that 11% growth that they were forecasting, which was the upper end of the growth they previously expected. So it's not all bad in Meta Platforms land. Is the stock an easy 2x, like Mohnish Pabrai says? Well, that remains to be seen, but it certainly is looking relatively cheap and like a relatively good value at today's prices. That's it for me today. Bye.